Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market update. Hope everybody is doing well. And in today's markets, guys, very interesting day. Nice little follow through to the upside after Jerome Powell's bullish statements in yesterday's Fed meeting. So the bulls pretty much running away with the show today, leading into some very big earnings. Now, we didn't have a lot of macro data today. That, as a matter of fact, comes in tomorrow. So tomorrow, very big day for macro. We have two big key events here. The non-farm payrolls, which is going to be the most important jobs report of the month. And then we also have our ISM services PMI. That is services inflation data, our last remaining sticky component of inflation. So it remains to be seen if that does come down and jobs come in good, we may see some further bullish follow through to the upside. However, if both of those numbers were negative, it'll be a battle between what happened in the earnings from after hours today, Apple coming up significantly after their earnings report. It'll be a battle between big tech moving up tomorrow and potentially these two numbers, if they come in negative and under the expectations here. So services PMI come in hotter than expected, and non-farm payrolls, if the jobs numbers come in lower than expected, well, those two negative macro elements will be battling with potential big tech gains tomorrow. So it could be an interesting day tomorrow either way. So in today's video, guys, we're going to take a look at our earnings. I have a few earnings prepared for you guys. We're going to do them in rapid format. So probably 3, 4, 5 minutes at most per earnings. Not going to go through much of the financial statements, but we will go through the gist of the earnings headlines and also the valuations and how the charts are looking and whether or not I deem the securities to be a buy or not. In terms of those earnings, guys, today we'll be covering Apple, of course, Coinbase, we're going to be doing Square. And then lastly, guys, I'm going to show you guys Expedia all the way down here. Tomorrow, we'll be covering a lot more. Tomorrow, what I want to do is cover Cloudflare, Fortinet, which came out in the after hours as well, and one that is not here, Mercado Libre, the so-called quote-unquote Amazon of Latin America, one stock that I've been preaching heavily on the channel ever since their last quarterly earnings about 3 months ago. So a lot to talk about today, guys. Let's get right into it. So SPY up 0.94% on the day, QQQ up 1.28% today. Very healthy day of broad market rotation, only healthcare leading to the downside ever so slightly. In terms of the heat map, guys, you'll see that it is a much better picture than yesterday. Really nice broad market performance. Big tech really leading your rally to the upside. Semiconductors having a great recovery from their negativity that they've been having in the past 2-3 days. Healthcare was your loss leader on the day. Financials, relatively muted and flat. Even your credit card issuers, not much gains there, in spite of MasterCard's very nice quarterly earnings that happened yesterday. And the bottom half of the market, very healthy as well. On the one-day relative performance, very stark contrast from earlier on in the week. Now pretty much full of green, only healthcare to the downside. And this past day of green has done wonders for our 1 week performance. Now a lot more sectors participating to the upside. Communication services, consumer cyclicals, utilities, real estate, healthcare, and technology finally in the green. To the downside, we do still have financials for the week, a little bit of a red point, and energy has been weighing to the downside on the markets as well. So in terms of our earnings, guys, before we get into a technical analysis portion where we'll do the rundown of our major indexes and big tech names, let's get into the earnings cycle right away. And we're going to start it off with a very good one, guys. We're going to start it off with the big boy, Apple. So Apple coming in, absolutely crushing earnings. And this was leading into my theory, guys. It's kind of like the Tesla trade all over again, right? We had so much negativity priced in to the stock so far over the past 3 months. Temporary issues, right? You guys remember the $2 billion European Union lawsuit, the Department of Justice lawsuit that happened earlier in March, 5 out of 6 quarters, flat revenue growth, China slowdown, plus the competition from Huawei, 10% iPhone sales decline, right? That was actually a fact. The Vision Pro is too expensive, lack of phone innovation, is Warren Buffett selling, AI is underwhelming. All of these temporary issues led to the stock really underperforming the market pretty much since the beginning of the year. So as a case in point was all the negative news priced into the stock? Well, I was likely thinking so, and that's why I made a juicy play to the upside that I'll show you guys at the end of the video. So pretty much classic case, just like Tesla, where the company was pretty much having all the negative headlines in the world, so any positivity released on the earnings would have probably sent it up green. We didn't know how much green, but it turns out to be significant green, about 6% to the upside in your after hours. So take a look at the headlines here, guys. Apple announces largest ever $110 billion share buyback as iPhone sales dropped 10%. So that actually was a fact. Now, moving on to the headlines, guys. Apple announced that its board had authorized $110 billion in share repurchases, a 22% increase over last year's $90 billion. It is the largest in history, not only Apple's history, the largest in the entire stock market history in terms of buyback authorizations. However, that was only one part of the bright spot here. However, overall sales fell 4%. So Apple a little bit weak on their sales. That was normal. That's what they'd been guiding for. The year-over-year comparisons against 2023, fairly tough. iPhone sales fell 10% year over year during the quarter, which Apple attributed to a tough comparison versus last year. Now let's take a look at some other lines of business, guys. So you'll see in terms of the numbers were actually quite decent. They did have a double beat, so beat on EPS by about 1.5%, and they did beat on revenue ever so slightly, but a beat is a beat, and Apple definitely needed that. In terms of their segments, iPhone revenue coming in slightly under the expectation, 45.96 versus 46. Mac revenue was fairly good, beat the expectation, 7.5 billion versus the 6.86. They attributed that to the release of the M3 processors earlier, so those seem to be doing fairly well for the company over the past quarter. iPad revenue still struggling, guys. I'll remind you, Apple hasn't released a new iPad model in over 2 years at this point, so it really is a weak point for the company, but they did address this lower in the article. Other product revenue, so think of watches and AirPods and stuff like that, right? 7.9 versus the 8.08, so missed there, missed on iPhones, but at least it's not missed on the iPads, missed on the other products. But here is the highlight, guys. The services revenue, 23.9 billion versus 23.2. This is extremely important, guys. You'll notice how this sales amount is a large component of their business, even versus the Macs, the iPads, and the other products, right? This services revenue is as large as these three categories combined. And the reason it's important, guys, I will show you, is because it's their highest margin business. Take a look at your services total net sales, almost 24 billion. Take a look at the cost of goods sold, only 6 billion. That is gross product margins of almost 75%. So it is their largest contributor to net margins. So when this division expands, such as it is, it really helps Apple boost earnings, and that was one of your major contributors, despite some of these other lines of business like iPad and other products coming in underwhelming. Now, Apple did not provide formal guidance, but Apple CEO Tim Cook told CNBC's that overall sales would grow low single digits during the next June quarter. The CFO, Luca Maestri, said that Apple expected double-digit year-over-year percentage growth in iPad sales in the current quarter. He added that he expected Apple's services division to continue growing at about the rate that it had been in the past 2 quarters, so roughly in the 10% mark. That is very, very, very healthy, and they are now expecting iPads to finally regain some steam. Apple said iPhone sales fell nearly 10%, suggesting weak demand for the current generation of iPhones, which were released in September. The sales were in line with analyst estimates, and Cook said that without last year's increased sales, iPhone revenues would have been flat. There was a lot of pulled forward demand in 2023 for phones, so it's very tough to compare to those sales elements. And just a reminder, guys, Apple will be releasing most likely an AI version of the iPhone, still to be determined whether or not that's going to be this September or September of 2025. So good things coming for the iPhone, and we do have a refresh of the iPad also on deck as well. Apple has not released a new iPad since 2022, which is a drag on sales. Revenue for the division fell 17%. Apple is expected to announce new iPads on May 7th, next week, guys, that could revive demand for the product line. Very, very bullish. Cook also said Apple has big plans to announce from an AI point of view during its iPad event next week, as well as the company's annual developer conference in June. So next week could be very big, guys, if they outline certain AI products for the Apple line. Think MacBooks, iPads, phones. That will be front and center for their, from the AI point of view, as Tim Cook just said. Now, services was a bright spot during the quarter. Sales rose 14.2%. We covered that. Now, the Greater China area, what people were worried about. Sales in Greater China were off 8%, which was significantly better than the 15.25 billion in sales expected by FactSet analysts. So they actually came into 16.3 billion, which was above the very negative estimate. So that was very good, guys. Analysts a bit too bearish on iPhone sales, so stands to argue that since this came in as a beat, that's why Apple's share price is rising as well, potentially quelling investor worries that Apple may have been losing market share to local competitors such as Huawei. Here's what Tim Cook had to say. I feel good about China. I think more about about long-term than to the next week or so. That's what Cook said. So long-term, he is still bullish on China. Now, where does Apple stand in terms of valuation, guys? Well, you guys very well know that I had been playing the heck out of this stock down in the lower 170s and was saying that it was a very good deal. But in their after-hours trading price at 184, is it still a good deal? Well, let's do some numbers here. Right, 2024 forward PE at the current after-hours share price of 184 is about a 28. That's not too bad for Apple, but when we put that PE ratio as an expression of their EPS growth rate, we only get a peg of 2.55. It's a little high, but not egregiously high. Apple does usually trade rich just because it's such a consistent and predictable company, so still not that terrible of a valuation. Most of your analyst expectations for future share price increases, guys, over the next year, most of the estimates are above $200. You can see that mostly the average is here at 196, but a lot of analysts are sitting up here 220 all the way to 250. So a lot of people are still very bullish on the stock. Decent quarterly report from them. Very, very happy that they're now through all of this negativity. So any future dips, guys, are going to be for a buying opportunity. If we revisit the 170s for any which reason, guys, don't tell me that you didn't have enough time to buy this one. We've literally had at this point 2.5 months to be able to buy Apple in this location. So such a gorgeous company, still on sale. Looking forward to big things from them in the future. Now, moving on to our next company, we're going to be covering Coinbase. So Coinbase, a stock that is largely traded because of how well it tracks the price of Bitcoin. So sometimes it acts as a proxy to Bitcoin. But how is the company doing itself? Well, you can see that prior to their earnings release, guys, they were up about 9% on the day. Very nice day for Coinbase. Their earnings came out and their earnings did very well. They beat EPS by a whopping 282%, and they beat on revenue by about 20%. Everything very, very good, guys. Q1 was an extremely bullish period for crypto. You need not to look any further than the performance of Bitcoin since the month of January. Take a look at the significant rise in the price of Bitcoin since January till now, and obviously the rise of price in Bitcoin leads to heightened trading activity, more interest, and more fees for Coinbase. It was a very good quarter for them, record quarter for them, as a matter of fact. And I'll remind you, the problem that Coinbase was having before is that it was inconsistent. It did have low debt. It was implementing a lot of cost management features, right? So really controlling costs over the past year, returning to profitability, and return of transaction volume, because crypto has been so hot in the past 4 months, right? And the concerns was, can it still be profitable for the entire fiscal year? And it appears as though that is now the case. They are reiterating guidance for the full year to be positive. So let's take a look at some of their headlines. They didn't move too much in the after hours, guys. Even though the earnings were fantastic, the stock was already up 9% on the day, right? The expected move for, before and after earnings was about 10%, and they largely did all of that before earnings even came out, but decent report from them. Coinbase reports first quarter revenue beat after Bitcoin rally leads to a surge in profit. So Coinbase, the primary marketplace in the US for buying and selling digital tokens, reported net income of $1.18 billion compared to a year ago that they had a loss of $79 million. Take a look down here, guys. I'll bring it up to you again. One of the concerns with this company was their inconsistent EPS, up, down, right? Positive, negative, slightly negative. Now we're finally coming back into positive territory, and revenue as well. Revenue was very inconsistent, but now, at least for the next 2 years, the company does foresee a little bit more consistency in terms of revenue growth. So that's a good thing for them. Now, profit in the quarter also includes a $650 million mark-to-market gain on crypto assets held for investment. So not only does Coinbase enable transactions for crypto, but they also invest heavily in crypto themselves, and it's really been paying dividends to them, especially in this last quarter. $650 million in gains in crypto. Must be nice, right? Consumer transaction revenue was $935 million for the quarter, up well 100% from the year prior period. Very good. Just goes to show, guys, when crypto is hot again, like it is currently in the cycle, a lot of people are trading, and that just brings in more fees for Coinbase. Very, very logical business, right? The industry has also seen an influx of institutional investors since the Securities and Exchange Commission approved a raft of new US spot Bitcoin ETFs. Many of the ETFs have partnered with Coinbase as their custody partner, right? So all these ETFs, they hold their Bitcoin in Coinbase as a custodial account. And obviously for providing those services, Coinbase will collect fees from that deposited Bitcoin by all these ETFs. They actually, I think they control 6 out of the 8 ETFs on the market right now in terms of being a custodian for all that Bitcoin. By the end of the first quarter, the funds had collectively brought in more than $50 billion. So very good to bring a lot more assets into Coinbase. Now, in terms of their shareholder slides, guys, one thing I wanted to point out for the company, we're not going to go too deep into this, guys. The one problem that Coinbase still has is it does not monetize its institutional clients as much as it should, in my humble opinion, all right? Take a look at your, and this has been the case for quarters and quarters in a row now. Take a look at your Q1 right here, right? So let me just zoom in. Here's your transaction revenue for consumers, right? $935 million. Now take a look at your transaction revenue for institutions, only $85 million. So on a total of about $1.1 billion, let's call it that consumers represent 90% of all transaction revenue and institutions represent 10% of all the transaction revenue. Why is that a problem? Well, look at the size, guys. The size, the reason that's a problem is because the size that consumers are versus institutions, right? So trading volume, right? Trading volume here, you can see that institutions have a lot more trading volume than consumers, even though consumers bring in more transaction fees. The reason that's a problem here, guys, is let me just zoom out, is the fact that, as I just said, you know, when you have 90% of all your transaction revenue coming in from consumers, but consumers only represent 20% of all volume, you need to be charging institutions more. Now, I obviously understand. I come from a market making background, guys. I used to work for financial institutions. I know how the game is played in terms of the pricing favoritism that is given to institutions versus consumers. However, that being said, I still think they can charge institutions a little bit more and it would do wonder for their margins. There's still no reason, guys. Institutions represent literally almost 90%, right? 80% at least of all trading volume, but they only bring in 10% of the fees. Just a little bit light in my humble opinion, right? Now, one bright point for Coinbase was their total subscription and services revenue business. And that's done very well. Stablecoin revenue, blockchain rewards, interest and finance fee income, the custodial fee revenues. This is from the ETFs, now up to $32 million in the quarter. It's not negligible, right? Decent amount of revenue. And then we have other subscription and services. Take a look. This is your previous quarter. This is all your quarters prior. Everything doing very well. Record quarter for total subscription and revenue services for Coinbase. So all in all, guys, fairly good report for Coinbase. In terms of valuation, well, let's take a look at the chart now first. We are still in the context, guys, of this gorgeous monthly uptrend, and this chart is literally tracking Bitcoin almost to the T. So I do expect if Bitcoin continues its upside momentum over the course of this year, which I do think will be the case, Coinbase will stand to benefit and Coinbase will most likely be able to continue on gaining these monthly levels. In terms of valuation, is the company cheap? Well, not that much. It's still a little bit high. Their 2024 forward PE at $220, which is their price right now, is about a 50. If we take that as an expression of their EPS growth rate, it gives them a forward peg of 2.28. It's not that bad for the company. Company's expanding profits, doing a good job, monetizing customers and institutions alike. It has its problems, but this company has been doing so many good things for the crypto space. So very happy to see that it's finally coming back into a profitable stance right now. Not my favorite company to play per se, but I do still think that there could be some significant upside if crypto does hold up its bull rally for the next year, which I do believe will be the case. Now, the third company we're going to take a look at here, guys, is going to be Square. Square, very, very solid company and is extremely cheap, guys. So let's take a quick look at Square, guys. If you don't remember my last quarter's introduction to Square, what Square is doing now is it's now a 3-in-1 solution. It's Cash App platform, so peer-to-peer sending. If I want to send money to anybody else, that is their Cash App platform. It's basically kind of like PayPal. They also have a buy now, pay later solution, which could be comparable to Affirm. And then third, they have banking, trading, and loan division, which can be compared to SoFi. So a 3-in-1 solution is Square. They've been doing a great job in building out their offerings over the past year and a half. They have revamped cost control now. They understood that was a problem. right? 2024 and further is going to be consistent net margin positive, low shares compensation, which is very good, low amount of debt, and extremely high EPS growth, guys. This is a story of recovery pretty much for Square, right? So EPS, take a look at EPS was struggling right here, and now boom, look at this expansion through 2027, and also revenue clearly expanding. So this company is finally getting some legs, and it is still at a relatively very cheap valuation here, guys, down here, trading literally at a 0.55 peg ratio at $75. That's very cheap. I will be giving Square more of a look, guys. I'm probably going to be playing this one a lot more aggressively in the $70 range. I'm even considering buying long-term call options on this company because I do believe the upside could be significant. This stock can literally 2x and would still only be a 1 peg. That is absolutely ridiculous. Those are the types of asymmetrical bets that I like to take. Now, in terms of their earnings, let's take a look at that. Block shares jump on better than expected first quarter results. The company after hours, guys, is up about 7.38%. They did a great job on earnings, beat on EPS by 18%, beat on revenue by 2.2%. Very decent beats across the board, and all of their lines of business are participating. Block, formerly known as Square, posted $2.909 billion in gross profit, up 22% from a year ago, guys. Take a look. Square has always had a little bit of an issue with net profits. You can see that on the bottom right-hand side, right over here, right? Or I can't. Right over there, right? Very struggling with net margins, but they're turning the quarter. Take a look at this. They're turning the quarter. Take a look at this most recent quarter, right? This was Q4. That was a profitable quarter. And now Q1 as well is a profitable quarter too. Very good, guys. These are the stories I like to see when a company is now finally coming into profitability. Same trade as SoFi. Now, the company reported net income of $472 million. Very good. More than quadruple the net income of only $98 million a year ago. So here is your profit. As I said, guys, going into profitability now. The Cash App business, which is the company's popular mobile payment platform, reported $1.26 billion in gross profit, 25% year-over-year jump. Very good. Monthly active users increased to 24 million in March for the Cash App division. Block ended the year with 57 million monthly transacting actives for Cash App. That's very good. High subscriber count, guys. Up 6% year over year. Inflows per transacting active were $1,255 each person, up 11% year over year. So not only do they have more people on Cash App, but every single person is spending more money on the app. The best of both worlds. Block has slimmed down operations in recent months. In January, Dorsey repeatedly said in a note to staffers that the company had laid off a large number of workers. This followed a round of layoffs in December. There is your cost control. Company is now super focused on profitability. He said Bitcoin will ultimately help Block serve more people around the world faster. Oh, here's a very interesting thing that Jack Dorsey was saying about Bitcoin. He said Block will be investing 10% of its gross profit from Bitcoin products into purchases of Bitcoin for investment. So they are now joining, well, they have always been an investor of Bitcoin. Now they're going to augment their investment. Now we have two very big companies, guys, as pretty much the leaders for Bitcoin right now in terms of corporate investment into Bitcoin. And those two companies are Tesla, and now we have Block also supporting that as well. If we can see more and more big companies, guys, using Bitcoin as a currency hedge, it's going to absolutely fly, right? Obviously, this will take a long time for people to come accustomed to it, but it's nice to see that two companies in the S&P 500 are now really moving forward on pushing Bitcoin as a decent source of investment income, right? Now, the $220 million the company invested in Bitcoin has grown 160% to $573 million at the end of the first quarter. So everybody winning on Bitcoin, Tesla, Coinbase, and now Square, all winning on their Bitcoin investments. Very happy for those companies. Now, that's pretty much everything for your Block earnings. The one thing that I wanted to show you guys is the company guidance. So take a look at your 2024 outlook. Very good, right? So here is the current versus previous. They raised guidance, raised gross profit guidance, 8.78 versus the expectation of 8.65. That is a year-over-year growth, 17 instead of 15. Very good raise. Adjusted earnings margins right here, EBITDA margins, 31 versus 30% expected. So raise on gross profit, raise on EBITDA margins, and now your adjusted operating income margins raised to 15% instead of 13%. Very solid, guys. Nothing bad to say about this company. Company is doing everything required to really grow its network, guys. And if you want me to take you through just a few slides, right? Just look at this healthy company growth, right? gross profit growing nicely, Cash App gross profit growing nicely, Square, their division where they help small businesses, right, with their payment application devices and supporting small businesses with a lot of different tools, well, that is now up significantly as well. All their lines of business are really doing amazing. And you can see their net income is really benefiting as a byproduct. Used to be negative, now heavily profitable. So I really like this company, guys, really like the valuation. And the technicals also are fairly amazing right now. Still a very tight range of accumulation down here, guys. In my opinion, anything low 70s, right? Mid 70s to low 70s, very solid area. Even if we can come back down, if for any which reason we revisit the mid 60s, guys, this is just a screaming buy for me. But anything in this lower area, guys, this lower area of support right now that we have all the way down here, right? Well, 42 is a bit low. I don't think they visit 42, but pretty much 75 down to pretty much $60. Super juicy buying opportunity for a company that's focusing on margin expansion for the future, and that their valuation is very cheap, looking very good on Square. A lot better than PayPal, in my opinion. You know, Square is just eating PayPal's lunch at this point, right? They have not only do they have a division which competes with PayPal, they have other divisions that PayPal just does not have. PayPal divested their buy now, pay later business, and PayPal does not have banking, tradings, and a loan division either. So this one is quickly becoming my favorite fintech play over and above PayPal because, believe it or not, this company is cheaper than PayPal and growing faster. So probably going to pivot my PayPal holdings potentially to Square as they were just starting to really outperform them now. Now moving on to Expedia. Expedia is going to be our fourth company, guys. Expedia reporting after the bell today as well. They are down 8% in the after hours, right? But it's not for the reasons you think. It's not because travel demand is diminishing. That would be a problem, but that is not the problem at all. Expedia actually said that travel was still booming, especially international travel, and even Booking.com, one that we're not going to take a look at today. They were up in the after hours. They reported earnings too, and they said, you can see it right here, guys. I'm not making this up. Booking tops Q1 profit estimates on robust international travel demand. Expedia said the exact same thing. Let's take a look at some of their numbers, guys. Now coming into a very nice area for the breakout retest trade, right? So beautiful monthly area of previous price range. Breakout, retest of the range, looking for this one to run later on in the year. Very juicy trade, 125 down to about 120 is the very juicy area that I will be looking probably to play aggressively, especially now that it's dipped down hard into this zone. In terms of their earnings, guys, very decent earnings. They had a nice beat on EPS here by about 250%. They were actually expected to go negative, but with a couple little accounting tricks, they were actually able to post some positive earnings. Nice to see that. And they did beat on revenue by about 3%. So why was the stock down in the after hours? Well, let's take a look here. Expedia Group Q1 2024 revenue growth amidst challenges. So let's take a look here, guys. Revenue was up 8% year over year. Very good. They reported a net loss, however, of $135 million compared to a net loss of 27. So the loss widening. It was from one division of their company, guys, VRBO, Vacation Rentals by Owners. They're pretty much a major competitor with Airbnb. Unfortunately, though, Airbnb is quite frankly just eating their lunch right now, okay? So earnings per share, we already covered that. Adjusted EBITDA, right? Earnings before interest, depreciation, and amortization increased 38%. That is very good. Accelerated share repurchases totaling about almost $800 million in the year. Very good. They're using their free cash flow properly. Gross bookings grew 3% to $30.2 billion, with lodging bookings up 4%. Very good. Travel demand remains in full focus right now. Very hot, very hot sector to trade. Very nice. The first quarter saw a total gross booking of $30.2 billion, 3% increase from the previous year, driven by a 7% increase in booked room nights. Notably, the business to business segment of the business outperformed with a 25% revenue increase to $833 million. So B2B is very simple, right? Expedia is a vacations, flight, hotels. They are a wholesaler. So they wholesale deals to travel agencies, right? That is what they call the business to business segment. They have a business to consumer, which is Expedia.com. You and I can go book vacations there, but they have a business to business segment where they get some of the wholesale deals that they have and offload those to different travel agencies, essentially, right? So very, very nice. Here's the CEO's comments on the earnings. Our first quarter results met our guidance with a revenue and earnings beat, but with less robust gross bookings. We are adjusting our full year guidance due to the slower than expected acceleration in our B2C business, primarily impacted by VRBO. If it wasn't for VRBO, guys, if it was only the Expedia business, that would be doing very, very well. Now, the conclusion, Expedia Group's first quarter 2024 demonstrated a solid revenue increase and a significant share repurchases, indicating a strong market position and operational resilience. However, investors may need to watch for the impact of ongoing challenges in VRBO on the company's overall performance. As the travel industry continues to evolve post-pandemic, Expedia's ability to adapt and innovate will be crucial in sustaining growth and profitability. Well, they are a very profitable company, guys. It's not a problem for them. Yes, they're having a little bit of issues with their VRBO segment, but as a whole, guys, they are expected to grow the business as a whole, right? Take a look at your EPS expansion. EPS, guys, was crushed, obviously, from the pandemic. Now slated to have some very nice expansionary phase through 2027 and revenues as well. Yes, their VRBO segment is holding them a little bit back, but is it going to be cumbersome to the business to where they can't grow? I really don't think so. I still think this area down here represents some decent value. Taking in relation their valuation here, guys, solid fundamentals, improved efficiency, travel demand remaining robust. We still have 21% EPS growth through 2027. Very, very good. So their 2024 PE at $125. Their share price right now is about a 10, relatively cheap. That gives them a PEG ratio. So PE as an expression of their EPS growth, only 0.48. Very, very cheap, guys. So I'm trying to bring you guys companies right now that are still cheap, and that are still in favorable industries such as travel, right? Take a look at Booking.com. Their PEG ratio is about a 1.44 at $3,700. Right now, the stock's at about $3,400, so let's take 10% off that. Let's call it about 1.3. So Expedia, a much cheaper deal and still growing very, very, very quickly. So I like their earnings, and I will continue to play them down here in the 125, 120 region. But my favorite play out of all, guys, my favorite plays in travel and entertainment as a whole, although they're quite high. Airbnb, although the fundamentals, the valuation is a little bit high. My other favorite company, guys, one of the companies that I rarely talk about, but is that it's one of the most solid stocks in the market and nobody ever talks about it, is Hilton Worldwide Holdings. Guys, if you guys don't know, Hilton now does not, similar to Marriott, Hilton doesn't own the hotels that they operate. The hotels are owned by different parties that operate under the Hilton brand. So essentially, Hilton is just a placeholder right now. So think of that. Their overhead expenses are not that much, right? They only have the name on the hotel and they collect all of the royalties. It's been doing wonders for their gross margins and their net margins, guys. Still very, very profitable company. I mean, look at this consistency, guys. When I show you Hilton, right? Such a consistent business. Obviously, COVID's a little blip, such a consistent business on EPS, such a consistent business on revenue as well. Marriott is just the same, right? So those are for your hotel plays, but for your more pure form, direct to consumer travel booking agencies, right? Expedia, fairly good deal. And Airbnb, of course, is another one that I like very much. So that's pretty much everything we had in terms of our earnings, guys. Hopefully you enjoyed those quicker than usual earnings recaps. If you did, consider dropping me a comment down below and let me know if you like that format better rather than the long form format where I take you guys through their financial statements, right? I try and do my best, but obviously, it's up to you guys. Whatever you guys want, I will do. So now let's jump into our technical analysis for the SPY, and then we'll take a look at big tech, and then we'll take a look at my portfolio. So moving into the SPY right now, SPY, we were looking at, as of yesterday, guys, we were keeping an eye on these lows right here, 497.84 for your higher low. Can the bulls hold this and continue this daily uptrend? Well, today they are definitely pushing for it. So tomorrow, I'll remind you, two big key factors here, ISM services and the jobs numbers. If those two things come in good, plus the fact that we have Apple up huge in the after hours today, tomorrow may just be a nice green day. And we could potentially move into the 510 area. Crack 510 tomorrow, daily uptrend continues, and the size of our weekly bounce continues as well, right? The bulls so far on the weekly have recaptured a decent amount over 50%, but not good enough to where we can almost guarantee that the bulls will be able to make a weekly trend change attempt, but it's getting there. So very, very nice product, very nice progress. And the hourly uptrend has been recaptured as of today, right? From the yesterday's Jerome Powell event, recapturing that. So we could expect some continuation. Still a little bit of overhead resistance, right? This whole green box all the way up here to about that 510 level. And we're still below the moving averages. So hopefully tomorrow, with tomorrow's news and the fact that Apple will make this rally come up higher, that may just be the big green candle that we need to get through this area of congestion. So let's watch that very closely. Bulls not looking too bad, guys. Still haven't lost this daily uptrend, right? Now moving on to QQQ. QQQ, same concept as the SPY, daily downtrend, and then the bulls finally got a daily uptrend going. We were looking for them to protect these lows for 1864, maintain the higher lows, and try for the higher highs. Now it does seem that they are moving into that direction. We'll see how the markets open, of course, with the two news events tomorrow and the continuation from Apple earnings, maybe even leading other big tech names to go green up on the day, right? So we'll see how it ends tomorrow, but overhead resistance, the same as SPY. All of our moving averages right here, and this huge green box, which was prior support up here, will now be resistance. So if we can get a nice big green day tomorrow, let's say we put in a 1.5% day, that would really take us up to our prior highs, maybe even crack above them, continue this daily uptrend, and continue putting more and more space between us and these lows, right? QQQ, as opposed to SPY, isn't a weekly downtrend. SPY's not in a downtrend yet, right? Downtrend would be lower high, lower low. QQQ is in a downtrend, right? Equal high, lower low, that's your weekly downtrend. Now the bulls have put in a decent size bounce, right? They've put in about, about over 50% at this point, making their way to that 618. I wish I could make this bigger for you guys. Give me a quick second, right? You can see we're almost up to that 618 level. So good. That's fairly decent. But if we get above that location, really get above that 618 by tomorrow, that sets us up beautifully, guys, for the eventual potential weekly trend change back to the bulls. So all in all, the bulls are still alive. They still have some work cut out for them to get above these big zones of resistance, but the trade is still looking quite favorable to the bulls. Now let's move on to financials. Give me a quick second. I don't think I've ever had a sip of coffee when we do financials. Anyways, so moving on to financials. Financials finally catching a little bit of a bid today. We will see, though. What we were looking for is daily downtrend, nice size bounce up, right? I'll remind you, this is a very healthy size bounce, right? Almost 75%. It gives the bulls a great chance of setting a daily higher low for the future trend change. Well, we're still waiting for that daily higher low. I'll remind you, no hourly trend change yet by the bulls. No significant hourly trend change. If we can get that into tomorrow, that means that your daily bounce is finally going to be underway. And then we'll be looking to attack these highs right here, 4120, to really get this daily uptrend back in motion. Right, looking very good in that respect right now. Now, in terms of the weekly as well, weekly still looking fairly good, still just looking for the weekly higher low, and now in a little bit of tight consolidation, right? Really waiting for this daily trend to break one way or the other. If we break to the downside, it is just daily downtrend, and will be weekly downside continuation. Break of these lows, 39.50, would be a weekly first downtrend, first time since last October. But as of now, we are not there yet. We are going to give the bulls their chance to see if they can follow through on this price action. All in all, though, financials not looking too bad. All of your financials earnings, the banks and the credit cards were all very, very good. So it will be, and Jerome Powell also yesterday saying that no rate hikes are potentially coming on the table. I really don't see a situation, guys, where financials can truly get crushed an additional from here all the way down another 8-9%. Just don't see it yet, right? We need a lot more fear catalysts surrounding interest rates for that to happen. Moving on to healthcare now. Healthcare having a little bit of recovery today, even though they were red, put in a nice high, right? What we don't want to see is make lower lows on healthcare. Why? Because, well, we're starting our attempt for a daily trend reversal, right? So this most recent leg of selling engulfed, and now we're kind of stuck in this tightening range. This tightening range on the daily doesn't look too good on the weekly. At a first glance, it does appear to be a bear flag for potential downside continuation, but we haven't got that yet. As a matter of fact, we're closer right now to the top end of this range than we are to the flush zone. And we know ever so slightly closer. So tomorrow we'll be looking for a break right now of 141.55. If we can get a break of that, guys, it'll be daily uptrend confirmed. And then we will be watching how much of this weekly move down Can the bulls recapture? So far, the bounce is very weak, but the job is not done yet. Until we really lose these levels right here, we can't say that the bulls have lost full control. Still need to give them a little bit of time, especially if we do have some nice, a broader market recovery into tomorrow. That could be the one catalyst that lifts healthcare over and above these levels. Get me back above these moving averages, and let's start recapturing a bit more of this weekly move down. So all in all, not looking too bad on healthcare. And keep in mind, we are right now in our big range of support. Prior all-time highs. That's why the bulls are getting some nice support down here. Moving on to semiconductors now. Semiconductors with a gorgeous day, 2% to the upside. Semiconductors doing the best that they can to try and recapture this important green box right here, 216 down to 212 roughly. That is the weekly prior zone of support, which we lost, set a weekly downtrend. Now the bulls are trying desperately to get that back. So daily downtrend was underway. Nice new daily uptrend now. We were looking, same thing as SPY and QQQ. Watch these lows right here, 205.91. Did not flush them, so we maintained the double bottom. Now it'll be up to the bulls to get back above a couple locations. All of our moving average, the pink is the 50 AMA. We're right there, and your shorter two moving average are there as well. And 216 to 213, horizontal prior support, that's resistance. So tomorrow is really a big day for the markets, guys. SPY, QQQ, and SMH are battling with big areas of confluence, moving averages, and resistances. If tomorrow's a big green day, we could get nicely above those. If we get nicely above those, daily uptrend continues, and your weekly bounce continues as well. I'll remind you, the weekly bounce on SMH is very healthy right now, guys. Take a look at the size of this bounce on SMH, right? 618 bounce, 62%. So very decent. It sets the bulls up nicely that even if we were to lose, right? Even if we come up here and then maybe consolidate for a little bit, we're just going to be looking for a weekly higher low to maybe reset this weekly uptrend since we've now lost it. So that's my analysis on SMH. Obviously, we don't have really any more big earnings this week for SMH, but I do believe, wait, let me just check a couple of big ones. AVGO, when is Broadcom? Broadcom is 3rd of June, so they're still a ways away. And even NVIDIA, guys, NVIDIA is in like 3 weeks at this point. So really no big companies reporting. Let me just check the heat map in case I'm forgetting some. Qualcomm's out, Micron, no. Nothing else is really going to move it. Yeah, it's really only NVIDIA and AVGO, your largest players, that can really move things from now on. So no earnings help from them. They'll just be going up as a byproduct of the overall market. But at least we have some nice recovery in the ones that did come down, such as AMD. Now, that's pretty much it for SMH. Now moving on to IWM. So IWM not looking too bad either. Nice little recovery today. Still looking for the break of past Monday's high, right? Break of 200. Daily uptrend will be back in control by the bulls, and this weekly bounce will continue. Size of the weekly bounce so far is not the greatest, right? Still only about 40% bounce. So for the bulls to really recapture the weekly, keep in mind, this was a loss of the weekly uptrend, loss of these lows. We lost the weekly uptrend. Now the bulls either have to do one of two things, the V-shape or the two-step recovery process. Personally, if you ask me, I do favor the two-step recovery process. I'd like to see them come at least as high, 204, 205, mount above this red box of resistance, use it as support, and then mount another rally up to the 212 area. This red box, crucial to get through this one. Huge prior support, previous resistance all of last year as well. Now we're finally battling with that zone again. Now, lastly, the Dow Jones. Dow Jones not moving too bad on the day. This will be very well helped by Apple tomorrow, especially though, guys. So Dow Jones kind of in the same situation, right? Daily downtrend. The bounce size was decent on this most recent bounce size, right? Got up as high. That was roughly a 61% bounce. So they did hit the level we were looking out for. And then we've kind of just been range bound between then, right? On the weekly, I'll give it to you. This kind of looks like a weekly bear flag for potential downside continuation, but Apple may just save the day on that. If we break above 38,500 tomorrow on the Dow Jones, guys, that will be daily uptrend set in motion. We'll be getting back above our moving averages and back above this big previous line of previous support, which is now acting as resistance. So break above there would be significant. The bulls can then use that to then increase their odds of continuing the daily uptrend. And then we would really start recapturing a lot of this weekly move in the process. So Dow Jones, looking good. We'll see how tomorrow goes. And obviously to the downside, guys, well, if we flush 37,700 to the downside, you guys know the drill. Weekly downtrend continues, and then we'll just be looking for monthly consolidation coming into our prior all-time highs. That is 36,700 down to about 35,500. Now, let's move into our big tech names, shall we? So Apple, great day with earnings, closing about 184 after the hours right now. So Apple really doing everything that we thought was possible from this company, right? Either one of two situations was going to happen. Either they were going to set the daily uptrend, which with earnings, which is exactly what they did, or we would potentially be revisiting these lows. Apple had created a lot of space, even with today, between us and these lows, about 5%. The expected move was about 4%, right? So did a great job of creating the space. Then they blew it out of the water in the after hours. Nice daily uptrend. There will now be a very, very big gap in this area. So if ever Apple pulls a Google and has a gap up earnings into a little bit of a consolidation, I do believe that this whole area right here, guys, right? Keep an eye, 175, 177. If ever we have a little bit of a dip down into the 180, 179, that'll be a nice opportunity to pick these daily higher lows for the potential daily trend change. Looking very good on Apple. Obviously, the weekly is looking gorgeous now as well. Prior weekly downtrend this entire year almost, right? Weekly downtrend now, this is your most recent leg of selling. We have now 100% engulfed that with today's earnings. So now we have a chance at potentially resetting into a weekly uptrend on Apple and really start making some moves even on the monthly, start recapturing some of these higher levels and attacking our all-time highs. So looking very good on Apple, save the day. Now, guys, it's going to be really tough for the bears to flush down below here. So if we can get in the mid 170s moving forward in the next month or two, I do believe that is an amazing buying opportunity for Apple. I don't think Apple, guys, I think that was pretty much going to be the bottom of Apple for this year. I may be wrong, but I'm pretty much 85% convinced right now this very well could have been the bottom of Apple for the year. And you guys know, since the bull market, this may be the bottom on Apple for a very long time. Now moving on to AMD. AMD recovering slightly today, 1.31% to the upside, still crushed from their earnings, right? So AMD really just trapped in this daily downtrend that they have right now, right? Well, actually, it's like this, and then the daily flush. So what they need to do, guys, is use this area that we're currently in right now, 140 down to about 130. That is your support box. That's where we're reacting from right now, reacting from the 200 daily moving average, which is this green line right here, reacting from that right now. Very, very healthy bounce in motion right now. So as soon as you see the hourly trend change, right, still not really underway yet. If we can get a little bit more tomorrow, hourly trend change, it means your daily bounce is underway. Same rules as the rest of everything applies. That we measure the size of the bounce. If we can get at least up to about 155 on this daily bounce, get me up to 155, sets up the bulls either, well, I mean, they could V-shape this if they want to, or if they can rather, but if you get me up to 155 before retracing, it sets up nicely to change back into a daily uptrend. Same thing as they did right here, guys. Literally the exact same trade, right? That had a nice bounce, 61% bounce, set the daily higher low thereafter, and then ran into the daily uptrend. So first step is number one, need to set the daily uptrend, and then we'll be attacking 165 to 160, which is big, big, big resistance. But first things first, need to regain that daily uptrend first, right? So not looking too bad on AMD. I still like this stock down here, 140 to about 130, and I will probably be playing it next week for some short puts in this area. Now moving on to Amazon. Amazon performing very well today, 3.2% to the upside. So Amazon now daily uptrend fully back in motion after having lost it here. Great earnings, daily uptrend back in motion, healthily above our moving averages, and also healthily above that 178. This yellow line, hugely problematic area for Amazon in the past. Amazon is now well beyond that. Weekly higher low is set as well, right? So double bottom on the weekly at these lows right here, looking great for weekly uptrend continuation, looking great for monthly trend continuation as well. No red flags on Amazon whatsoever. If anything, guys, if we do revisit, because we are still kind of trapped in this zone right here, very, very choppy area. If we do a revisit, guys, the lower 180s, high 170s, play some short puts. I can't tell you guys to do that. My bad. Not financial advice. We'll be playing some short puts down here, probably, 176, 175. I'm going to get aggressive with Amazon just because I do think that they're gonna just leave us behind here, guys. We're gonna have to say bye-bye to Amazon because eventually they will just start leaving us behind. So we should be able to play this stock as much as possible in these lower levels, try and accumulate some shares because I do think the best is still ahead of us for Amazon. Moving on to Google now. Google up about 1.75%. Very decent. No secret here. Google, nice shift to the daily uptrend after earnings. Looking for the daily higher low. We got the daily higher low. How do you know it's set? Well, we recaptured the hourly trend. hourly downtrend. You see why these time frame analysis, guys, is so important, right? Tightening range right here, and then boom, here it was. Hourly uptrend shift. You now know your daily higher low is set. So we'll be looking for Google to expand this and try and attack the all-time highs at about the 176 mark. Now, there is obviously a situation where we could potentially fail, set a lower high, and then lower low into daily downtrend. Is that big of a deal? Nope, because Google has tons and tons and tons of support down here, 160 to about 155. If ever we get close to this area again, that 160 level, I will be aggressively playing Google as well, because this is just another one, kind of like Amazon. I think, guys, Google is just going to run away from us this year. So this could be one of our last buying opportunities. Well, actually, I mean, if you were listening to the channel in the past, we should have all been buying right here. I was buying here. I was making plays here. I hope you guys were doing the same. Now, it is well beyond us, and I do think that will continue over the course of this year. Moving on to Meta now. Meta actually recovering somewhat today, 0.57% to the upside, but still kind of trapped in this tight range at the lows. So daily downtrend still in effect for Meta right now, trying to reverse into a daily uptrend. We need the break and close above 448, guys. Crucial. So if tomorrow big tech is nice and good, well, we may be able to get that break above, set the daily uptrend on Meta. If we get that daily uptrend, well, then we need to measure the size of the retracement here in relation to our weekly move down, right? And if you want the levels right away, I'll give you to them. We need to get at least as high as about 489. If we can get as high as 49, sets up the bulls nicely to eventually set up the two-step weekly trend reversal process. Looking very good. Not nervous for Meta. They had amazing earnings. If anything, guys, if we continue just having a little bit of a weak moment for Meta, I will probably be playing Meta on a weekly recurring basis in terms of short puts down here, 414 down to 400. And if for ever which reason I catch Meta on a 3-4% downside and we come down into the 415s again, I'm probably going to load up on some leap year contracts, probably for 2025 or maybe even 2026. Going to build a position in Meta and just hold it, because I do think this one will be an outperform over the next 1 to 2 years. Now, moving on to Microsoft. Microsoft kind of struggling here today. You can barely see the candle because it's literally right at our resistance line, right? So closing up about 0.73%. That's fairly decent for Microsoft. Still battling with overhead resistance, right? Still battling with this resistance line right here, which is about that 397 area that came out in the past. Daily downtrend still in motion for Microsoft. So what Microsoft needs to do is continue this daily bounce a little bit more and then try and set up for the daily trend change. As of now, guys, the hourly time frame is not that clear on Microsoft. You can argue that they've recaptured the hourly, but it's just not that clear. So we're going to be waiting for Microsoft to put in more gains. If they get rejected by these moving averages, could see a situation where we get rejected here, set the higher low, use this 497 as support, and then make the daily trend change. As of now, though, Microsoft still representing a great opportunity for some purchases, guys, because Microsoft as well, I do think over the course of this year, will eventually just start leaving us behind. So looking very good. Even on the weekly, guys, not looking too bad. Look, if we close above this level, guys, that'll be 2 weekly touches of your 26 EMA. The same thing that happened last October during the sell-off before continued rally. So looking like that the same, right? Double, triple, quadruple bottom at this point on the weekly. So looking pretty good for Microsoft to be able to maintain this range and move above. If ever we break below for some reason, you guys know me, 375 down to 365, juicy location to be playing Microsoft for some very juicy gains in the next year. Moving on to Netflix now. Give me a second. All right, moving on to Netflix, about 2.44% to the upside, looking very good. But this one is kind of trapped like Meta, right? Kind of in the lows of after earnings. That's Meta. This is Netflix, kind of the same setup, right? So Netflix, you see how similar they are, right? So Netflix still kind of trapped right now. It was a daily downtrend. The bulls have stopped the bleeding. We're now in a a longer form 2-week tightening range at this point. You could argue that on the weekly, it is still a bear flag. However, the bulls are making some very nice attempts to the highs at this point. Hourly trend back in favor of the bulls. If they do continue that, guys, it's going to be looking very good to start and attack this 578 level. 575, 578, right? Why that's important? Well, I'll remind you, the 575 location was hugely important back in 2020 and 2021. And right now, that area is still playing against us right now. And even on the daily, you can see all these moving averages up here. So if we can do something like this, guys, where we start breaking above here tomorrow, then we'll need to eventually set The daily uptrend, I'd like to get above at least to about 585, 590. If we can do that, decent bounce size, maybe be able to use this area as support. The top end of these candles would be support as well, and get our daily trend change. And then we can measure the size of the weekly bounce. The size of the weekly bounce, for it to be healthy, since Netflix now did lose the weekly uptrend, we would need to get as high as about 600, guys. If you can get me back up to 600, well, the bulls may stand a very good chance at resetting into a weekly uptrend, since this one has now been slightly lost by flushing these lows, right? Looking fairly decent on Netflix. And in the flip case that we roll over, guys, you guys know me, 520 down to 500 is my sweet spot for Netflix stock. Now moving on to NVIDIA. NVIDIA having a nice day as well, 3.3% to the upside. NVIDIA never really losing the daily uptrend, right? We were always looking for that daily higher low, anything above 783, and we got it yesterday. How did you know that it's been set? Well, just keep an eye, guys. Hourly time frame is the guide when you're looking for daily points of reversal, and now we have the hourly trend change back. Daily bulls are in full control. We'll be looking to mount and close above 885 by tomorrow. If you can do that, we'll be doing a few things. Number one, we'll be clearing above all our moving averages, which are still stuck with us right now. And we'll also be clearing above the 850, this yellow line right here. Big level. I know we're above it today, but need to put some extra space between us and that level. If they can do all that, well, the weekly is going to be looking gorgeous for NVIDIA here, guys. Just a beautiful weekly uptrend. Weekly higher low is set, and we're maybe going to be looking for further trend continuation to the upside. So looking very good here, guys. If this week can close green and get back above maybe here, if we can get, as close to 890 maybe tomorrow, which is not that much for NVIDIA, that would be really an engulfing move over the past 2 weeks of the last week's brutal candle, right? And total top to bottom of this weekly retracement, if we can get up to about that 890, 900 level, that would be about a 70% retracement. It sets the bulls up gorgeously. If we can't V-shape this, at least they have a very good chance at doing the two-step weekly trend recovery process. So looking very good on NVIDIA. Moving on to Tesla now. Tesla, another little day of consolidation here. So pretty much flat on the day, and Tesla is really reacting nicely to the level that we pointed out on the charts yesterday. That is 180 down to about 170. Huge previous area of resistance and support back here. Now we should be using it as support. All of our moving averages are down there as well, looking for the daily higher low to set the daily trend change. Still no daily trend in motion right now, guys. This is just one daily swing up. You need to set the daily higher low, get the higher high. You have your confirmed daily uptrend at that point. And then on the weekly, guys, on the weekly as well, looking very good for Tesla, right? So Tesla was in a weekly downtrend, fully engulfing move at this point. Need to eventually set that weekly higher low for further trend change at that point, guys. We have not had a weekly uptrend on Tesla. Boy, it's been a long time, guys, all the way since last October, right? So it's been a very long time. Looking forward to see if bulls can make some progress onto that. Maybe a nice little swing trade opportunity, guys, if Tesla continues pulling back here. The volatility on Tesla is pretty good right now. If we come down to the lower 170s, may just be an opportunity for some short puts down here. Maybe even the 160, 155 region could be an interesting swing trade. Looking good for the bulls, though. Looking forward to see, can they give us further continuation? Very good area of support right now. Would not be surprised if we do get another bounce coming out of here. Moving on to Palantir now. Palantir up 1.94%. So Palantir still kind of just, hesitating in these levels. In line with our analysis that we've been doing all week, guys, Palantir has earnings on Monday. So I don't expect them to be able to break significant levels by Monday. And by significant levels, I mean breaking 20.5 to the downside, or really breaking 2350 to the upside, right? Tomorrow, if it's a big green day, we may just get some follow through, and that will be good for the stock. As of now, daily uptrend in motion. Daily higher low was set yesterday, 2158. How do we know it's set? Well, the hourly trend is back to the bulls. You guys know the drill by now, right? Now we'll just be looking for them to eclipse a couple of things at the same time. This horizontal resistance line, 2304, which stems all the way back here, all the way here. If we mount above that, guys, bulls are going to be looking real pretty coming into earnings, because then if we're above here at around the 2370 range, that gives us a margin of safety of about 14% to the downside prior to earnings. And earnings, guys, I will be playing earnings lower 20 to 19s a lot. I'll be writing a lot of short puts, guys. Trust me, because I like the company in that range right there. Healthily above our moving averages right now, and doing a great job at starting to recover a lot of this most recent weekly leg of selling. Now up to about 61, 62% of the move. Looking very good for follow through. But like I said, price action very muted for Palantir because they have earnings on the Monday session. So I don't really expect much from them before then. Now moving on to PayPal lastly. PayPal up 1.27% and up nothing nothing after Square's earnings, unfortunately. So PayPal still kind of struggling right here, right? Daily uptrend in motion, still just looking for the daily higher low and continuation on that trend. Daily higher low is set as of yesterday. Why? Well, because guys, we pretty much recaptured the hourly uptrend from the yesterday session. You can just exclude Jerome Powell from that, right? Nice little hourly trend recapture. It's not pretty, but it is a technical hourly uptrend. So we'll be looking for the bulls to continue pushing. If they can push back up here into the $70 range, that would be best case scenario, but we're going to need broad market participation for that to happen. So looking decent on PayPal right here. You know, we are above a lot of crucial areas of support, above all our major moving averages, above the big area of consolidation that we were trapped in for so long back here, 63 to 61. Now we could be, we could be in motion, guys. If tomorrow's candle closes nicely and we can get a little bit more of this weekly candle to close green, going to be looking nicely for the expansion of this weekly trend to the upside. Beautiful weekly leg up. If we can continue this weekly leg up, guys, the next stop for PayPal, in my opinion, is going to be that $75 mark. So looking very good on this stock. Now, that's pretty much everything that I had for you guys in terms of our earnings and stocks. Now, let's take a brief look into my portfolio. All right, guys, so taking a look at the portfolio right now, we had a very good day, realized about $360 in profit. Yesterday's trades played out very well, and today's trades in the after hours for earnings also played out very well. So quick little recap, you guys remember I had the QComs from yesterday for their earnings, the 155s and the 152s. We closed them for pretty much nothing over the course of the day, as QCom largely had a nice 10% gain. So we're able to get out of those, close them completely worthless, pocketed, 95+% profit, closed them for a couple of cents. AMDs, we closed them today as well for about 14 cents, wrote them for about 60. So that is as well an 80% profit on this position. I closed those to be able to reallocate the premium to something better for the after hours today. Very happy with the way that trade played out as well. And then we also had the Albemarle's 108 and 110. You can see that their last traded price is just a couple pennies on the dollar. We were really able to get some very nice premium for them yesterday. Albemarle ending about the $125 mark. So very far away from our strike prices. So all in all, very good earnings trading session yesterday, which generated some decent profit. For the total profit, guys, I'll be doing a tally tomorrow after the close, and I'll show you guys how much money we've generated this week as a whole, but it is a very nice amount. Even despite our roughly almost $800 loss on Starbucks, this week is a very, very good week. Now, moving on to the plays that we had for the earnings in the after hours. Well, we still have the SoFis. Those are on deck for tomorrow. We'll see how this one closes. The 6.5s are probably going to be worthless. It's up to the $7 puts, right? So the $7, we're right there right now, 6.99. We'll see if I get assigned or not. If I get assigned, the covered calls are going to be extremely juicy, guys. But either way, very happy with this position. At $200 in premium that we're probably going to realize tomorrow either which way. Now, the other plays that we had the Fortinet $56 puts. We got them for 63 cents. 2 contracts on the Fortinet. So Fortinet was a 2 standard deviation play. Prior to the earnings, they were trading at about $65. And we wrote the 56s, right? So we went with the 56s. After earnings, they did drop 8%, but it wasn't enough to assign us. That's why we go for more than the expected move, right? So take a look here, 65 down to about 56. That would have been a drop of about 14%. Now that's pretty much double what the stock dropped. So by tomorrow, guys, these should also be worthless. Another win here, but I would not mind being assigned Fortinet, guys. That is literally my green box where I go shopping for Fortinet. So that's why I wrote those down here in this region as well. Very nice trade. We wrote these squares. 55s for next Friday, and 56s, we had those from yesterday when Square had a significant dip right after their lawsuit allegations. So we wrote those at the candle right here, and today was good, and now we're back up with earnings as well. So these 2 positions will be worthless as well, pocketing all of this premium. So 2 times 55 contracts and 2 56 contracts, they will be in our pockets by tomorrow. Now, we did have a few plays on Apple prior to earnings. So we wrote the 162 5s. We got about 62 cents for them. Not as much as I would have liked to get on them, but still a decent amount, coupled with the 167 5s for about $1.44. All in all, not too bad. $200 on Apple for some strikes that were pretty conservative, right? Apple leading into earnings was trading at about the $172 mark, right? 172, 173. So it was some decent cushion, for the 167 5s. That would have been a drop of roughly 3.5%. And then all the way to the 162s, that would have been like 6.5%. I would have loved buying shares down there, but doesn't look like we're going to get them. So all this premium is going to end up in our pocket again. So you can see, guys, Very good day so far, but it continues. Coinbase, we had the Coinbase 180s. I said I would be playing Coinbase if I could find some premium low enough. Well, is this low enough for you guys? The stock was trading 228 before the earnings. I went with the 180s. The 180s would have been a 21% drop. The stock was only expected to move 10% in either direction. So I was happy to get those 180 puts. Those 180 puts will most likely be worthless, even though they're for May 10th, which is next Friday. Pretty sure I'll be able to close these at 90+% profit by tomorrow. So another 150 bucks in our pockets, guys. This is why it's just, you know, whether you want to play different styles of earnings plays, right? Long calls, long puts, straddles. It all depends on the stock, right? Whether you want to go long calls, long puts, or straddles, it depends on your what you think is going to happen on the earnings. The strategy that I'm doing right now, you can literally do this same strategy on all stocks, regardless of what you think they're going to do, right? All we're doing is writing 2 times below the expected move. So rather than calculating, rather than speculating, are these earnings going to go up? Are they going to go down? What percentage can they go up and down? Am I going to be profitable in my straddle? Are long calls worth it? Are long puts going to be worth it? What strike should I get? What expiry should I get, right? Just take all that out. And if you want a very, very easy strategy, 2 times the standard deviation, which line up with areas of big support, right? That's all I'm doing is I'm going 1.5 to 2 times the expected move on stocks that I would not mind owning, and we're going for them close to areas of support. The only one that I really got washed on was Starbucks, but I'm pretty sure a lot of people got washed on it. And that being said, even my $80, it's not that bad of a strike. It is in a general sense of area of support, right? So all in all, guys, very, very easy strategy. Then we had the Expedia 120s. We'll see how they close tomorrow. Expedia trading about 125 right now, but I'm pretty sure they will maintain above 120 by tomorrow. If ever we get assigned on these, really wouldn't mind. That's exactly where I want to buy Expedia in the first place. You can see the green box is right on screen, 125 down to 120. Would not mind being assigned on these, but I don't think we will be. So very nice trade on those as well. Then we had the Cloudflare net puts, $70 puts for almost 70 cents for 1%, right? Where was Cloudflare trading before the earnings? Before the earnings, they were trading roughly at the $88 mark. So I went with the 70s, guys. 70s is literally 21% off the current share price. Stock was down 13% in the after hours. Let me move myself over. They were down 13% after their earnings. Still not enough to assign me. Take a look at why I wrote these 70 puts down here. That is where your big prior weekly support is, and is also top end of this resistance right here, top end of this resistance right here, bottom end of the support right here. So I could draw a big box in this whole, let's call it $70 range. Excuse me, that was even higher than where I was, right? So this lower range right here, $70, that's where I was on this stock specifically. So very, very, very solid right now. I meant that, sorry, when I was talking about current price right now back here, support, the current price is there right now. I'm pretty much down here at the, the lower $70 range. Looking very, very good. That one also should be pretty much worthless as of tomorrow. I would be highly surprised if I get assigned these. But if ever I get assigned some Cloudflare shares down here at such a juicy location, literally in the $70 range back here, I would not mind owning that stock, right? So looking very, very good. All of our put plays, significant profits. I'll do the total tally for tomorrow. And we did have a little surprise here for you guys, right? So, Mercado Libre had a very good day after earnings. We're now profitable on our 2 shares. I really wanted to build out this position a little bit more, guys. I just didn't pull the trigger when it was down in the $1,300 range. At that point, we had been reallocating a lot of our capital to the strategy we're currently running, and I just didn't build out the position. Maybe a little bit of a mistake, but it's okay. We're now back into profit, so looking very good. They had earnings. I'll cover their earnings tomorrow. And then we did have a couple things. So our Amazon leap calls, they're performing very, very nicely. And then I went with the Apple earnings play that I said I was building yesterday, guys. So hopefully a few of you may have taken that same trade and participated, but we had 3 Apple calls, the May 31 calls, so about 30 days out in the future, right? So we get a little bit more extrinsic value in the option. So we got those for about $4.27, pretty much exactly what I was telling you guys yesterday. That's the price we paid. We got the 175 strike. So these tomorrow should be opening very, very profitably, right? So very nice call option play on Apple. Most likely I will probably let them ride a little bit. I maybe just may take one off the table, just one of these tomorrow, right? 175, if Apple opens where it's currently at right now, let's say Apple opens around 183, 184. These should probably be at least a 2x, right? So they might be about $8. I may take one of them off the table. If I can get 8, 9, and potentially even $10 if the volatility is up for some which reason, depending on how it opens, of course, and the price of the options. If I can get $8, $9, I may just close one of them, which would pay for almost 2 of these contracts, and then just let the 2 other ones pretty much ride, right? So at that point, I'd be covering 2/3 of my cost with one option being closed, and I may just let the other ones ride for maybe another week and see if Apple can really develop, really get some legs and start moving up even more after these earnings, maybe into the higher 180s and 190s. So looking very good all across the board. So I hope you guys enjoyed today's videos. That was pretty much everything I had for you guys today. If you did enjoy the video, consider dropping a like. Would really appreciate it for the growth of the channel, guys. And obviously consider subscribing to the channel if you're new here. I'd love to have you guys here. We do this every single Monday to Friday, and occasionally some videos on the weekend as well. So hopefully you guys have been enjoying that. And if ever you have any questions whatsoever, guys, on stocks, technical analysis, options plays you're considering, macro environment discussions, anything you want, feel free to leave them down below in the comments and I'll be happy to answer them. So I'll see you guys tomorrow after the close. Take care, happy trading, and peace.